Stuart Gray, Head of Research at MEPS International. It's great to have you back on Marketing Minutes. How are you doing?
Very well, and thanks for having me back.
Oh, it's great to have your insight and share some of MEPS research along the way. This time we're reviewing MEPS recent research for the European Steel Review and very specifically looking at the UK steel market. So we'll get straight into it, Stuart. I mean, as in mainland Europe, we've seen that changes to various safeguard mechanisms have probably been the key influence on steel prices recently. Can you perhaps give an overview of the UK steel supply picture as it is at the moment and reflect upon that within those comments?
I'll certainly do that, and there's been quite some drastic changes. So from a March perspective, it's quite evident that the UK isn't short of steel overall. It's quite an interesting dynamic because there's tightening in specific product segments. I think the key issue is more the market. They have to understand the flexibility of the supply chain rather than the volume at this moment, at this juncture. However, the UK is even more import dependent than any time before this, especially on flats and coated products. Domestic capacity exists, but it's not fully available currently. And I think that's creating a bit flexibility in the system itself. And with that, although availability is still present and it's still plentiful, there's a bit less predictability. And again, particularly in the coated products, like hot dip galv product. But what's driving this is trade policy. Not demand, trade policy. And there's got to be a distinction between what's happening now in April and what's going to happen in July. So April is not just a reset. We have a quarterly reset in terms of import volumes. But the Turkish hot dip galv is now been included within the quotas. And that's creating a bit of tightening as well, because in that they've also reduced their volume to just over 24,000 tonnes for this particular quarter. And there's also other changes to the alloy merchant bars in category 12A. And then when we look forward to July, well, there's drastic reduction in the quotas and also a doubling of the tariffs. I think the UK has actually gone a little bit more than what the EU actually did. I think it's around about 60% in terms of reduction on the quotas. So there's been quite a response in the market. Our research partners definitely say that there's more forward buying before this quarter started. It's creating a cautious environment in terms of trading. And the mills are certainly firmer with their prices. So the takeaway in terms of your question, is supply is tightening. It's driven mainly by policy and a reduction in terms of flexibility.
Right. So, I mean, looking at the flip side of that, we did notice recently that the UK's manufacturing PMI had gone, a fair bit above 50 into positive territory, into growth territory. But is that something that we're seeing reflected in the comments of MEPS research partners in the UK? Are they experiencing that strong demand?
I think it's a little bit mixed in terms of the feedback that we certainly get. We speak to a whole array of companies across the supply chain, but if you look at those companies that have got contracts in place already set for the year, well, they'll say it's pretty good. Although they do fix the prices, there are mechanisms to change that price. Maybe it's on a quarterly or half yearly. So from that aspect, not too bad. But when you start looking at those companies that deal on the spot market, in terms of specific sectors, demand is stable but considered weak. So if you go back to the manufacturing PMI, yes, It's in the growth territory above that 50 index points, but there's no meaningful uplift in steel demand. And then if you look at the construction sector, and remember the construction sector is much larger, a real good steel consuming sector, well, that's weak. It's contracting at an alarming rate, and there's no growth in that sector at the moment. So all round, the feedback, especially for those companies involved in construction, market conditions are weak and their order books don't look that good. If you look at the environment within the UK, and we know with borrowing costs, it's high, we've got high energy costs, that's also a limiting factor in terms of growth. So essentially, demand's not driving the market at this stage.
Okay, so it's a point where we take those two factors into account, the supply and demand. And if we can consider, Stuart, how's that affecting steel prices in the UK at the moment?
Yeah, I think if you look specifically at the supply constraints as well as the specific trade measures, what's happening outside of the UK, external factors such as the Middle Eastern conflict, they're all playing a part, and prices are increasing. The concern is that those increases are not demand driven. So if you look at flat products during March, we'll look just for example, hot roll coil reached 560 as a low base. That rose quite considerably from February into March by £80 a tonne. Cold roll coil, hot dip galv followed the same trend. Plate maybe slightly lagging a bit. It's a bit more moderate movement. There's high inventory levels. And also in that particular sector, construction, yellow goods, a bit less demand. Long products, however, also lagged even more so, maybe between £5 and £15 a tonne in terms of their increase. But again, those products are normally ideally suited for the construction sector, and that's being affected. So at this juncture in March, there's certainly a two-tier structure in terms of pricing difference between flats and longs. It also brings out the behavior from suppliers. They're more firmer with their prices. They want to increase those prices. It's quite clear. Research partners, depending where you are in that supply chain, if you're a stockholder, that beefs up your profit margin quite quickly. And then we've also found that the offers from the mills are shorter. So price rises in March were really driven by supply and policy factors.
Okay, so I mean, we've already talked about some of the risk factors involved. I mean, the conflict in the Middle East, the duration of that, the effect of that, the inflation that might spark, that's a particular concern. But there are various risks at play. Having said that, MEPS, always has the challenge in the European Steel Review of delivering its 12-month forecast. Can you perhaps just give us a flavour of that price outlook that MEPS is predicting?
Yeah, I think in terms of the forecast, and I don't envy the forecasters in this environment, black swan events always bring a drastic change. You can look back at the January, February forecast and quite a drastic change in terms of March. And that can change again going forward with other factors coming into play. I think there's a few things to just say with regards to the forecast about the market. It's obviously not supported by fundamental strength. Trade policy, supply constraints, rising costs, the Middle East also affects that. But quite frankly, if you look at the trend, the price increase trend that we're reflecting in February into March, there's been a shift. So the peak in the price has shifted maybe from April, and now we're reflecting it in June. So that trend and those price has increased. Going into summer months in July and onwards, it's a slight dip in the forecast. That's brought on about the summer season, the vacation time, and then it picks up. But again, if you compare that to February, the February forecast was indicating a bit more firmer downward trend. What could happen and what could happen with the safeguards being implemented in July is that perhaps there could be even more support in rising prices in terms of the forecast. I think short-term support in terms of strong activity, we noticed that, but we're certainly not in that demand-driven cycle.
It's an interesting time, isn't it, to be covering global steel markets, not just the UK. So many risks, so many factors that can influence demand and investment. It's worth keeping an eye on the European Steel Review and MEPS other publications, isn't it?
I was actually speaking to a few of our research partners this morning. It doesn't matter where they're located, whether the UK or the EU or anywhere in the world, but I think really as companies, it's a difficult time. When someone says that the market is uncertain, it definitely is. To try, buyers like to see trends. The supply chain, any company likes to see a stable type of trend so they can plan forward. So really, it's quite a difficult time, and it's coming through in this month's research so far.
Okay, Stuart, thanks ever so much for that summary of the UK market. As I say, the best thing that people can do is keep up to date through MEPS on steel market updates,
Absolutely.
prices, indices and forecasts going forward. We're always probably delivering the most reliable forecast we can to keep people on track and identify those trends. We're making life a bit more predictable.
Great.
Great stuff. Thanks, Stuart. Thanks for your time.
Thanks, Tom.